Hello everyone, welcome to my morning brief. So today I'm going to be talking about inflation rates. It's not really an exciting topic, but I think it's very, very important. If you have been following the news lately, I don't know, maybe checked out metrics. One of the headlines yesterday was inflation rate. Nigeria's inflation rate touched 16.47% for January. Incredible number. Last month, when I did reel out my predictions for this year, I was certain that we're going to hit 16% inflation rate at some point this year, but I didn't even think it was going to be this soon. So it's February and we are 16.4%. It's just crazy. And then for food inflation is 20.5%. That's what you call galloping inflation. And then even for our regular core inflation, which is the one that takes away all the volatile food items, it's 11.8%. So what does this all mean for you and me? Inflation rate, like we all know, is just a measure of the rising cost of goods and services, and it's something that has already happened. It's just that we're seeing the numbers. So the fact that they are telling us that inflation rate is 16.4%, they're basically telling us what happened last month. Okay, because they've checked the prices of prices of goods and services, including food items, for January 2021 compared to January 2020, and the difference is about 20.4%. Sorry, the difference is about 16.4%. So that's an incredibly high number, and it's something to give us a cause of concern. So what does this mean for you? I'm going to look at it from two perspectives. One, in terms of your investments, your purchasing power. So every other month last year, the value of your income in Naira is basically been eroded. So if you've got Naira that you've been saving, it's worth less than it was, last year. When you compare it to this year, worth a lot more less. So what do you do? Well, typically, people will tell you when you're in a high inflationary environment to invest in assets that give you higher returns. And what kind of assets it is? They tell you to invest in real estate, because real estate is like a hedge against inflation. They tell you to invest in the stock market, because maybe companies have a way of being ahead of inflation, or invest in fixed income securities like bonds and real estate. So let's look at each of these ones. So if you invest in real estate, for example, it's a good hedge against inflation. But ask yourself one question. If you buy a house for 50 million, maybe somewhere in, let's say, Ajah or something, how much rent can you get there? Because if we are going to get 20% return above at least close to inflation rate, then that means you're going to be renting your house there for 10 million per annum. Can you get that kind of income from real estate? No. If you're lucky, you probably get 2%. Okay? So you probably get 2 million of your 50. Right? So you're getting less than 5% return on that investment. So in Nigeria, it's probably not so much of a hedge, at least in terms of income. From the point of view of an asset, it probably is, and that's, if you eventually sell that asset, then you can cash in. But if you don't sell that asset, it's like that, because rents don't change that often. You don't increase rent every year. So rent is not something that is typically ahead of inflation or is benchmarked on inflation. So even real estate is a problem. So let's move to stocks. Stocks are good if you choose the right ones that can grow. But if you choose the wrong ones, you lose money. And then if you decide to buy and hold, then you're looking at what people call dividend yield. So dividend yield basically is how much income you got compared to the amount you bought the stock for. So if you buy shares for 20 naira and then they pay you a dividend of 2 naira, then your dividend yield is essentially 10%. So for you to be above inflation, you need to buy a stock for 20 naira and hope that you get a dividend yield of 5 naira or above, or 4 naira above. Then at least you're getting, 20% or more in return. Very few stocks can give you that kind of return, and those stocks were cheap last year, so you can't even get them this year. They can't give you that return this year. So fixed income. So if you were to go into fixed income, that's like treasury bills, bonds, fixed deposits. They have been extremely low in the last few months, if not years. And I think I've discussed it severally on my money briefs. Treasury bills only 1 year treasury bills only just rose to 4% last month, and it was actually a surprise. FGN bonds that used to be 12%, they're now 6%. It's kind of strange, right? Because it's as if the economy is kind of dislocated. You've got inflation rate at 20%, and then you've got interest rates for saving at 4-5%. I mean, I think I've explained the reason why it's like that. The reason why inflation rate is up is really got nothing to do with interest rates. It's really more about the economy. Logistics problems, herdsmen issues, transportation problems, increase in electricity prices, increase in fuel prices, devaluation. Really got nothing to do with interest, because interest rate occurs when there's a lot of money in the system. So it's not money supply, it's a different thing. So what do we now invest in to hedge against inflation? And that's what I've been thinking. I'm not going to tell you to do Ponzi schemes, because that's just wrong. Agri-tech, perhaps. There are some agri-tech investments that you can do that can give you maybe 10% every 6 months if you find good ones, but they are risky. And I do believe that very soon they're not going to be giving you all those kind of mouth-watering interest rates, because they're going to be regulated. And when they are regulated, they're expected to be upright with the way they promote their investments. So in the short term, maybe some good agri-tech investments. Foreign stocks, yeah, I think foreign stocks are good. I mean, the way the US market is going, perhaps it's a better hedge. And besides, you're buying foreign stocks in dollars, so you're better off maybe converting your naira to dollars and then buying foreign stocks. At least you're sure that you're earning dollars, and no better hedge against inflation, at least in Nigeria, than when you have dollar-related investments. And then the last one, I don't do it, but I support it. Cryptocurrency. Maybe I might start doing it. So why do I think it's a good hedge? It is because what do people do when there's inflation? People just move to metals, maybe gold and things like that, and just buy because they have good preservation. Bitcoins is gradually getting into that asset class. Don't see Bitcoins as a currency. It's just a hedge. People go there, pack money in there because they are afraid of inflation. And that's why the prices are going up. When people are satisfied that inflation is no longer a problem, then you could probably see Bitcoin price going down. So that's it, guys. My 10 minutes is almost up. I hope that I was able to explain the impact of these recent inflation numbers to your investment. If you've got questions, as usual, drop comments. I'll try as much as possible to respond to all of them. Thank you very much. Enjoy the rest of your week. Bye-bye.